What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So overall today, it was an absolutely insane day. We saw the key indexes, the SPY, the Qs, and even the Dow falling very, very significantly in the first half of the day. And then they all just rallied right back up into the green. One of the craziest days that I have seen in a very long time. Now, what we're going to be covering in this update is we have a little bit of Ortex data to go over. We are going to be taking a look at the options chain because there are some key things that I want to point out to you guys to sort of pat yourselves on the back on to really see how kind of, not necessarily the narrative, but the attitude towards the options chain on AMC has really shifted. But the two main important things that I really want to cover are these hedge funds that, honestly, some pretty familiar names are having very, very significant problems. Melvin Capital being one of them. We do have a couple of Dave Lauer tweets that we have to go over as well. And in addition, I want to go over this SEC meeting that is coming up at the end of this week, where a lot of people are expecting this securities lending transparency rule, when it gets implemented, to really cause some sort of very, very significant event to the upside. One thing I want to point out to you guys, when has a rule implementation ever really gotten us anywhere? But what I really want to say about this is just the start. When you think about where we have come from over the last year or so and where these rule changes are headed, if we end up seeing these proposed rule changes by the SEC start to get implemented, let's not stop there. What they could be essentially doing is trying to throw retail investors a bone so we get something and honestly, we end up just shutting up. That is not going to happen, especially not on my watch when we're looking at just how messed up this securities lending market is. But we're going to be going over what we need to look for going into that vote later on this week. So before we get into all of that information, if you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC did end up closing the day today down about 7.4%. Not necessarily anything that we really wanted to see, but we did see the buyers really come out in full force right around 12:30 today, really buying up these dips right as AMC was falling below 1450, that previous key technical breakout level. Now, coming over to the Ortex data right here, let me just give this a quick refresh so we can see exactly what's going on. We have the utilization at 69.78%. Remember, the most basic explanation as to why the utilization is falling is when you think of the equation for utilization, it's shares on loan divided by shares available to loan. So with institutions buying a lot more shares of AMC, and those shares not necessarily actually going out on loan, and exceeding the averages that we've seen of those shares on loan in the past, well, that utilization number is going to come down and lower this cost to borrow that we are seeing here, only at around 1.37%. But we are seeing 20.25% estimated short interest, still very, very high. Now, when we come over and take a look at the exact option chain for AMC going into the end of this week, well, typically we would expect to see not a lot of open interest on a weekly expiration date, especially right after a giant monthly and yearly options expiration date last week. But look at the volume that we are seeing on these at the money and in the money strikes. On the $16 strike, 18,000 contracts were traded. The 17, 22,000 contracts were traded. And on the 18 and on the 19, 14,000 contracts each. And when we come down and compare this to the deepest out of the money strike, the 60, only 3,000 contracts were traded. So the apes and the retail investor community is really waking up and starting to see what impact buying these closer to the money calls could have on price. Now, if you guys still want to go buy those out of the money calls, hoping to essentially have a winning lottery ticket, you can do that. It's not my money. I don't get to say what you do with your money. But again, you really got to think about what effect that this is all going to have on the actual price action of AMC and honestly any other stock that you are trying to do this on as well. Now, when we get into this next part of the video, when we talk about some of these hedge funds having very, very significant problems and quite honestly on the verge of collapse, a lot of people are going to kind of say, well, if these hedge funds are going to collapse, then they're going to cover their AMC shorts if they are short on AMC, GameStop, or any of these other stocks. And then it also brings up the statement of, well, a market crash would then cause a squeeze for AMC. Now, we do have to talk about that a little bit just because of the fact you have to think about the environments in which the shorts would want to cover their positions or if they're about to get forced out. So the first scenario is, well, the stock starts to run up. They start to get margin calls. They then meet those margin calls, but then the cost to borrow starts to go up. They can no longer meet those margin requirements and pay that cost to borrow. They then get forcibly bought in by their prime broker or whoever is providing them that leverage, and then they close their position. The other thing, and the other side, the other environment part of this is, well, if the market starts to really collapse, which is possible at this point with the way that the market is headed, but again, we just have to wait and see, especially with Jerome Powell coming up in the midpoint of this week. If the market really starts to sell off, AMC is going to go with it. Now, if the hedge funds then who are short are going to be covering their position, they're no longer going to be seeing any downside. So the stock would have fallen significantly after the market was going to correct anyway. So it's not like the market's going to sell off and AMC is absolutely going to go vertical. I don't want people to think that. Now, coming over to this tweet from Dave Lauer right here, I just heard a rumor that Melvin Capital, famous Melvin Capital for shorting and over leveraging themselves on GME last year, is down 25% month to date and might be blowing up. Now, Dave Lauer is a trusted source of information in this community, and I don't think that he would put this tweet out there if he did not have a pretty credible source on this matter. But again, you kind of have to take this with a little bit of a grain of salt. But we do have another article that we can look at that goes over this in more detail. Right here, it's a frigid start to 2022 for hedge funds. Melvin D1 Tiger Global. Remember, all of those people that were at Tiger Global, they came off, they're called Tiger Cubs, and they essentially go out and start their own shops. And all these investors love to over leverage themselves on very, very risky derivatives and more suffer double-digit losses amid stock market plunge. Now, when we come down a little bit here, we can see that amid a market sell-off that has torched growth stocks that soared during the pandemic, Melvin Capital is once again staring down double-digit losses to start the new year, according to people familiar with the performance. Now, if you guys remember, there's an interview with Ken Griffin, and he really likes Gabe Plotkin, who's the head of Melvin Capital, and he honestly said that Gabe Plotkin is one of the most talented investors of his generation. Now, let's take a look at what Melvin Capital, what their performance was in 2021. Well, Melvin Capital right here, they were down 41.15% and are starting off 2022 on the wrong foot. Now, there's a lot of these other funds that are having issues as well. And remember, everybody's over leveraged right now. That's kind of been the theme over the last couple of years after we saw the kind of rally, that V-shaped recovery off of the lows of the pandemic crash. Now, there's a lot of uncertainty as to whether or not Melvin Capital or any of these other hedge funds that we're looking at on this list still hold or even hold at all any short positions on the stocks that we like to talk about on a day-to-day basis. Now, that kind of leads us into the next thing that we're going to talk about, which is securities lending transparency. Now, when we come over to this article right here, I do really want to get into this because a lot of people are expecting this to be a real significant catalyst, and I just don't think that this is going to be much of a catalyst at all. The U.S. Securities and Exchange Commission will vote next week to propose boosting hedge fund disclosures in a bid to enhance industry oversight and investor protections, the agency's chair said on Wednesday. Gary Gensler told reporters that the SEC will vote to propose rule changes to the form private fund, which many hedge funds and other private funds file quarterly detailing their purchases and sales of securities. So they're voting to propose rule changes. Nothing's actually going into effect. Now, again, we come down here. While Gensler did not detail any of the proposed rule changes, so we don't have really any insight into what they're actually going to be voting on. Now, I know some people are going to kind of hint at what they think they actually are voting on. We've seen a lot of these rules come out in the past, and there really hasn't been a whole lot of an effect on the stocks that we look at on a day-to-day basis. We've seen collateral haircuts. We've seen the enhanced margin rules. We saw NSCC 002, the automatic margin call rules. And they really haven't done a whole lot for us. So I don't want us to put all our eggs in one basket to really think that this is going to be the end-all be-all. Yes, eventually we are going to make our voices heard, and we have been doing this so that the securities lending market is going to be more transparent. But Gary Gensler this week is not going to vote on something and implement something right away that is going to drastically change how hedge funds report their short sales of securities. This is going to be something that is going to take a lot of time to play out, in terms of getting that type of transparency. So I want everybody to kind of dial it back a little bit on this vote coming up later this week, because we don't even really know what they're voting for. These organizations are typically and classically going to be shady and operate behind these closed doors and these veils where these retail investors can't even see what the SEC is working on to try and protect retail investors. So that is really going to wrap up this update on AMC and the craziness that we saw in the market today. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.